Thank you for joining us. Welcome to Business Incorporated. I'm Chimeze Obi Iwago. On the show today, Trump's tweet on South African land expropriation hits the South African rand. Egypt targets $11 billion foreign investment in 2018 to 2019. Plus, Eritrea mulls new port as Ethiopia reapproachment spurs investors. We'll begin with the markets, and here in Africa, the Nigerian stock market, which has been on holidays, resumed trading today with the index looking southwards. At intraday, the NSE index was down 0.07%. The JSE index continues to wax strong despite the disappointing inflation numbers that came in yesterday and Trump's tweet on land expropriation, which has hit the rand. The JSE index was up 0.13%. Egypt remains closed. In the meantime, markets in the Middle East remain closed. The markets, which traded last on Friday last week, saw the Dubai market lead gains with 0.44%. Abu Dhabi was down 0.45%. Qatar closed in the red 1.50%, leading losses. Saudi gained marginally 0.02%. And in Europe, stocks hovered around the flat line in early trade after Beijing implemented new retaliatory tariffs against the United States. Let's bring in Daniel Cook now to tell us more. Good afternoon, Daniel. A beautiful day to you.
Yeah, a beautiful day to you, Chimi, as well. Today is supposed to be the last very hot day here in Germany. I know I've been complaining a lot that this was such a hot summer. Tomorrow, supposedly the temperatures are set to drop by more than 10 degrees. I actually can't wait. And yes, you said it correctly. We are kind of dealing with a flat line here at the stock market right now. The blue chip index DAX just slightly with 1 point in the red at the moment.
I can actually see that behind you there, Daniel. But let's talk about emerging markets here. The U.S. market having beaten the emerging market seriously this year. Are we near a historical trend of performance divergence? Is it time to start buying emerging markets, or not just yet?
Well, it's always a little bit difficult for me as a, as a journalist to give recommendations, what to buy or what not to buy. But I can tell you, yes, that investors are keeping a very close look on these emerging markets, in many parts, basically. When you talk about Africa, when you talk about South America, I always hear when I talk to traders here that they see this big potential in many of those countries, in many of those markets. Also, there is still this uncertainty, going on here at the moment with the trade war. Pretty much from one day to the other, everything can change. So yes, they're telling me it makes quite a look to shift also your attention, from those markets that we are normally talking about here in Europe or in the United States to other ones as well.
Okay, let's look at this tit-for-tat trade tariffs between Washington and Beijing, which seems to be getting worse. However, while the Chinese and Hong Kong stocks seem to be getting hot, although Chinese market eventually closed up today, Wall Street and European markets look unfazed. Explain this for us.
Yeah, exactly. Well, I guess investors were already prepared for this scenario. That's why we don't see a major reaction happening today. As I said, the blue chip index DAX at the moment, well, now we are 6 points in the red. So it doesn't really change. I mean, there has been some volatility around the markets in Europe. The markets cannot really decide in which direction to go, which direction not to go. But yes, investors are telling me that the latest news does not make the trade war conflict in any way easier. They do believe that it's still going to be there's still going to be lots of time until this issue is going to be solved. Maybe even until the moment Donald Trump will leave his office. Very interesting also because we have this ongoing conflict also in the United States with those two men arrested that had, well, not arrested, but who might have to go to jail and who had very close connection to U.S. President Donald Trump. Today he was saying in in an interview that the market would see a complete crash in case he would ever get impeached. Would this really be happening? Well, I do have doubts that we would see a big crash happening. Of course, there would be somehow a reaction of the stock market whenever something happens that gives uncertainty. We do see a reaction happening, a major crash. I don't believe so, also because of the fact, that the United States in general, the economy is doing extremely good at the moment. And also we have to keep in mind that, there are lots of investors who also have lost quite an enormous amount of money because of the US president.
Now let's look at this big IPO, which is supposed to happen soon, and investors are looking forward to it, but it doesn't seem to be coming through. Now, are the markets disappointed in this Saudi Aramco's IPO delayed but not denied mode?
Oh yes, they are disappointed, because we are talking here about the biggest IPO in history, not like a small IPO that we sometimes see here happening on a Friday in Frankfurt from a tech or pharmaceutical company. This would be really a mega IPO. The company was planning to put 5% of the company, as a public listing, and would hope to, or is hoping to generate $1 million with it. With this, they would have a total valuation of $2 trillion in an amount. It's even hard to know how many zeros there are after the two. But yes, we're hearing that it's not canceled, that it will be most likely delayed. They were putting out a statement today that it will be the decision of the company when this company would go to a public listing. And the market conditions in general are actually not bad, because when you take a look at the oil price this year, just during this year, one Brent of oil got 16% more expensive, something that oil companies certainly would like a lot, but the ones driving a car here in Europe or in the United States certainly not.
Well, let's hope that IPO happens pretty soon. Thank you very much for your time, Daniel.